when you take a look at the broader averages, still holding on to gains. Dow off the highs of the day, up just around 489 points. So let's talk about all this with Linda Duessel, Federated Hermes senior equity strategist. Linda, it's great to see you. Let's start with the losses that we're seeing overseas, specifically some of the concern about what this could mean for the U.S. when it comes to U.S. and China policy, and of course, the economic implications there. From a market's perspective, though, do you think the reaction that we're seeing in some of these Chinese names is a bit of an overreaction?
Well, thank you for having me, Shauna and Dave. And, only time will tell whether this is an overreaction. With what we've been through here in these last several years, anything can happen, I guess we come to see. But the reason I think that the market is behaving so emotionally about this, with what you saw with the footage and the leading out of the previous ruler of that country, it just, and kind of the consolidation of power. Everybody knew that President Xi would definitely get another term, maybe would be in place for our lifetimes, but this kind of a hold on power. He almost talks as if he doesn't care what markets think. He doesn't care what companies around the globe might do in terms of trying to exit there. I've heard many people say that Russia is uninvestable and we at Federated Hermes don't have exposure there. But we have had exposure internationally. And we've always said that China is the poster child for emerging markets. It's a really tough call right now to decide that could be uninvestable. So there's a lot of discussion that has to be had here.
Yeah, it does appear, at least on the outside, he does not care at this point. What do you make of our markets continuing to rally after the S&P gained 4.7% and still a strong start to this week?
Yeah, much more comfortable talking about the USA here. Much more. We have said at Federated Hermes, we think that we're going to be in a broad trading range of 3,400 to 4,200 based on earnings and what price you ought to pay for them. We're kind of in the middle of that range, been so for some number of months right now. And, I'm somebody who travels across the country pretty much every week. And one of the main questions that I get wherever I go is, what should I buy now? I believe there's still too much money on the sidelines. We have too much money and we remember the great times. And I know that's a fact because we were buying meme stocks as recently as summer of this year. So we're all talking about global recession, slowing down here in the economy, inflation not coming off as fast as the Fed wants. Why are we bidding up the markets? Well, it's a midterm election year. Right after every midterm election years, many of them, most, you get a nice rally, and you're starting to see breadth come up again. It's just a lot of money looking for a place to put it to work. And I guess you maybe are going to go buy China today, and maybe you won't buy Europe today.
Well, Linda, let's talk a little bit more about that. I know you were saying that you have been asked this a number of times. Outside of some of those beaten up stocks today, where are you seeing the opportunity?
Okay, so it's an interesting time to traverse. I've been comparing today with the 70s where you had vicious bear market rallies and then big pullbacks. We would call this a bear market rally, and it can be a vicious one. But if you are a long-term investor and not a trader and you say, but you know what, I have cash and I'd like to put some money to work, then let's look for something that might be a fat pitch. We're starting to look at maybe some more ideas over in tech land, some of the larger cap names, not necessarily speaking of the FANG stocks. Even semiconductors we've seen are getting to be an interesting place. And that's an early cycle play, but here we are. They've been bid down as if there were a recession. Cheapest sectors, I should say industries, still energy very cheap, and we continue to like that a lot. Home builders, I'm loath to say this on TV, home builders are being crushed right now, but versus their forward PE is as cheap as it's been really since the 1970s. You can say the same thing for metals and minings. You could say the same thing for banks. This is for a long-term investor, and these are not particularly timely. But neither was the energy call back in November of 2020 when we said, you might take a flyer here. It's historically cheap.
No doubt. Looking forward to this week, it's going to be a busy one. Microsoft, Amazon, Apple, Meta, just to name a few, Exxon and Chevron. You mentioned energy. Just give me one thing you expect that we'll learn throughout a very pivotal earnings week.
Yes, and it is, I believe, about 48% of the market cap is going to tell us about their earnings this week. We've all said coming into this quarter, we're not worried about what happened in the last quarter. We're worried about the outlook. We're so afraid of the outlook. And what we're going to watch for throughout the various sectors is what we've learned so far, which, believe it or not, so far, forward earnings estimates are down just 1%. Are we getting no message still yet of a weakness here in the USA corporates that are still having their own big expenses to pay and still having to pay up for workers? And that could be a tell that would allow the market to continue to power in a nice rally here into the year end, maybe back up to those highs of 4,200. Then I would say have your sell list ready. This 2023 is going to be a very interesting year.
We can all agree on that. Linda Duessel, great to have you. Appreciate it very much.